Picture this. You wake up tomorrow morning, check your bank account, and your money is gone. Not stolen. Not hacked. Just worthless. The dollar, the euro, the pound. They've collapsed overnight. Hyperinflation has made your life savings worth less than the paper they're not even printed on anymore. Sounds like a dystopian movie, right? But it's happened before. Germany in the 1920s. Zimbabwe in the 2000s, Venezuela just a few years ago. Currencies can collapse. And when they do, societies crumble with them. Now here's where it gets interesting. Some people think digital currencies, cryptocurrencies, central bank digital currencies, stablecoins are the solution. The lifeboat that saves us when traditional money fails. Others think they're the iceberg that will sink the entire financial system. So which is it? Are digital currencies the economic lifeline that will revolutionize how we handle money? Or are they a systematic collapse waiting to happen? Today, we're diving deep into the world of digital currencies in 2025. We'll explore what's actually happening right now, separate the hype from reality, and figure out whether this technology is saving us or setting us up for disaster. Because this isn't just about Bitcoin going up or down. This is about the future of money itself. Let's get into it. Alright, let's start with where we actually are in 2025. Because the digital currency landscape looks very different from what it did just a few years ago. First, let's talk about cryptocurrencies. Bitcoin is still around, still volatile, still controversial. It's currently hovering around. Well, by the time you watch this, it'll be different. That's kind of the point. Bitcoin's value swings wildly, which makes it terrible as actual currency but attractive as a speculative investment. Ethereum is still the second biggest crypto, powering smart contracts and decentralized applications. Then there are thousands of other cryptocurrencies, most of which will probably be worthless in a few years, if they aren't already. But here's what's changed. Institutional adoption has accelerated. Major financial institutions now offer crypto services. Countries like El Salvador have made Bitcoin legal tender. Others are exploring it seriously. Cryptocurrency is no longer just a fringe technology. It's entered the mainstream conversation. Second, central bank digital currencies, CBDCs. This is where things get really interesting. Over 100 countries are now exploring or developing CBDCs. China has already launched the digital Yuan in multiple cities. The European Central Bank is working on a digital euro. Even the US Federal Reserve is researching a digital dollar, though they're moving cautiously. CBDCs are different from cryptocurrencies. They're government-issued, centralized, controlled. They're basically digital versions of traditional currency, but with some unique features we'll get into. Third, stablecoins. These are cryptocurrencies designed to maintain a stable value by being backed by reserves, usually US dollars. Tether, USDC, and others have become crucial infrastructure in the crypto world. But they're also raising serious regulatory concerns. So that's the landscape. Now let's talk about why some people think this is humanity's economic salvation. Let's start with the optimistic view. Why do some people believe digital currencies are going to save the global economy? Reason number 1, financial inclusion. There are about 1.4 billion adults globally who don't have access to traditional banking. No bank account. No credit cards. No way to participate in the modern economy. But many of them have smartphones. And with digital currencies, you don't need a bank account. You just need an internet connection. Suddenly, people in rural Kenya or remote parts of India can send and receive money, access financial services, and participate in the global economy. This isn't theoretical. In countries like Kenya, mobile money services like M-Pesa have already transformed how people handle finances. Digital currencies could take this even further. Reason number 2, remittances. If you're a worker in the US sending money to family in Mexico or the Philippines, traditional remittance services charge outrageous fees, sometimes 10 to 15%. That's money taken from people who often can't afford to lose it. Digital currencies can reduce those fees to almost nothing. Transactions can happen in minutes instead of days. The impact on global poverty could be enormous. Reason number 3, protection against inflation and currency collapse. If your national currency is experiencing hyperinflation, what do? Historically, you tried to convert to US dollars. But that requires access to dollars and foreign exchange markets. With digital currencies, anyone with internet access can protect their wealth. People in Venezuela, Argentina, and Turkey have already been using crypto to escape their collapsing currencies. It's not perfect, but it's an option that didn't exist before. Reason number 4, transparency and efficiency. Digital currencies, especially those built on blockchain, create transparent, immutable records of transactions. This could reduce corruption, streamline international trade, and make the financial system more efficient. And reason number 5, monetary innovation. Central bank digital currencies could give governments new tools for economic policy. They could program money to expire if not spent, encouraging consumption during recessions. They could deliver stimulus payments instantly. They could implement negative interest rates more easily. These are the arguments. Digital currencies as tools for inclusion, efficiency, and economic empowerment. Sounds pretty good, right? But there's another side to this story. Now let's talk about why some people think digital currencies are a ticking time bomb, ready to bring down the entire financial system. First up, the systemic risk from stablecoins. Remember Tether and others? They claim to be backed one-to-one by real US dollars. But here's the catch. The transparency is limited and the audits are questionable. If it turns out they aren't fully backed and people start cashing out all at once, the entire crypto market could collapse overnight. Since these stablecoins are now tangled up with traditional finance, that collapse could easily spill over into banks, hedge funds, and the wider economy. Imagine the 2008 financial crisis, but potentially even worse because so much of this is happening in an unregulated Wild West. Next, let's talk about central bank digital currencies, or CBDCs, and the chilling prospect of total surveillance. If governments issue their own digital cash, they could potentially track every single transaction you make. Every coffee you buy, every bill you pay, every donation you send. Your financial privacy? Gone. China's digital yuan already has this capability. The government can see who's spending what, where, and when. This data could be used for social credit scores, restricting what you can buy, or even freezing your account for political reasons. Even in democracies, the temptation to use these powers would be immense. CBDCs could become the most powerful surveillance tool in history, turning money itself into a mechanism of control. Then there's the risk of bank runs. If you could hold your money directly and safely with the central bank through a CBDC, why would you keep it in a commercial bank? Banks need your deposits to lend out money and keep the economy moving. If everyone pulled their cash out to hold it in a CBDC during a crisis, banks could fail. The entire banking system we know could unravel. Central bankers know this is a huge risk, but the solutions are tricky. They might have to limit how much CBDC you can even hold, which kind of defeats the purpose, doesn't it? And we can't forget about the sheer volatility and speculation. Most cryptocurrencies are incredibly unstable. Bitcoin can swing 20% in a single day. That's not a currency. It's a casino chip. This has turned the market into a playground for gamblers, not a foundation for a stable economy. This speculation attracts all sorts of scams and fraud, pump-and-dump schemes, rug pulls, and elaborate Ponzi schemes disguised as the next big thing. In the end, it's usually ordinary people who lose their savings while the insiders walk away rich. Finally, there's the environmental cost. Just mining Bitcoin uses more energy than entire countries. As we're facing a global climate crisis, does it really make sense to build a new financial system that requires burning massive amounts of electricity just to function? So, digital currencies as tools for surveillance, financial chaos, and environmental damage. It's not exactly the utopian dream we were promised, is it? With all those competing visions in mind, let's look at what's actually happening on the ground right now, in 2025. The crypto market has matured a little. It's still volatile, but big institutions have stepped in, bringing a bit more stability. You can now buy Bitcoin ETFs, which makes it easier for traditional investors to get involved without the headache of managing crypto themselves. Regulations are slowly, very slowly starting to take shape, but they're different everywhere you look. Meanwhile, CBDCs are moving from theory to reality. China is expanding its digital yuan pilot. The European Union is getting closer to launching a digital euro. India has its own digital rupee pilot. Dozens of smaller countries are also testing or have already launched their own CBDCs. But here's the twist. Adoption is much slower than expected. It turns out, most people are pretty happy with the payment systems they already have. In countries with good banking infrastructure, a CBDC doesn't offer much of an advantage over Venmo, PayPal, or just tapping your credit card. The huge demand that central banks were hoping for just isn't there. Stablecoins are facing some serious heat. Regulators are demanding proof of reserves and better audits. Some stablecoin issuers are cooperating, while others are fighting back. The result of this battle will decide if stablecoins become a legitimate part of our financial system, or if they go down in a spectacular implosion. We're also seeing some fascinating hybrid ideas emerge. Some countries are exploring programmable money, digital currencies with rules built right into the code. Imagine stimulus checks that expire if you don't spend them, forcing a boost to the economy. Or payments that can only be used for specific things, like food or healthcare. The technology is evolving, the rules are being written, and the real-world impact is still a huge question mark. So, what's the uncomfortable truth about digital currencies? They're probably not the world-saving miracle some people claim, but they're not a total disaster either. They're just tools, and like any tool, they can be used for good or for bad. Think about the internet back in the 90s. You had two camps. One thought it would democratize information and bring about global peace and understanding. The other was convinced it would destroy privacy, spread lies, and become a haven for criminals. So who was right? Well, both of them. The internet gave us incredible access to information, but it also brought us new forms of surveillance, misinformation, and crime. It was transformative in both good ways and bad. Digital currencies will likely go down a similar road. They could provide financial access to billions who are currently unbanked. But they could also create new ways to commit financial crimes. They could make some transactions way more efficient, but they might also introduce new risks to the entire system. The real question isn't whether digital currencies are good or bad. The question is, how do we get the most out of the good stuff while keeping the bad stuff to a minimum? This is where smart regulation comes in. We need rules that are strong enough to prevent fraud and protect people, but not so tight that they kill off all innovation. We also need countries to work together. Money flows globally, so if one country has super strict rules and another has none, it just creates loopholes. And finally, we all need to be more aware. We have to understand what this technology actually is, what the real risks are, and what trade-offs we're making. Right now, most people are either blindly cheering for crypto or completely dismissing it. Neither of those approaches is very helpful. Okay, so what does all this mean for you personally? Should you be dumping your life savings into crypto? Panicking about government digital currencies? Preparing for the end of the financial world? Let's get practical. If you're looking at cryptocurrency as an investment, you need to understand its speculation. Plain and simple. It is extremely volatile. You could make a lot of money, or you could lose everything. The number one rule is don't invest more than you can afford to lose. And please don't bet your retirement on some random coin a stranger is hyping on social media. If you're worried about government-issued digital currencies and your privacy, now is the time to pay attention. See how your country is approaching this. Get involved in the political conversation. Demand transparency and strong privacy protections. These systems are being designed as we speak, and public pressure really does matter. And if you're just curious about using digital currencies for everyday things like sending money to family abroad, do your homework. Understand the fees, the risks, and whether it's even legal where you live. Stick to well-known, reputable platforms. And always be skeptical of anything that sounds too good to be true, because it probably is. Most importantly, just stay informed. This whole landscape is changing incredibly fast. What's true today might be totally different in 6 months. Follow credible news sources, try to understand the tech, and make decisions based on good information. We're living through a moment where a fundamental part of our society money is being reinvented. That creates both massive opportunities and serious dangers. Being informed is your best tool for navigating both. Alright, let's wrap this all up. Digital currencies in 2025 are not the answer to all our problems, but they're not the apocalypse either. They are a new technology with real potential benefits and very real risks. On the plus side, they could lead to more financial inclusion, cheaper international payments, and new tools to manage economies. On the negative side, they could create systemic financial risks, enable massive surveillance, and are still highly speculative. What actually happens next comes down to the choices we make. Smart regulation, international cooperation, and built-in privacy protections can help us steer this ship in the right direction. But getting that balance right is going to take constant effort and a willingness to adapt as we learn. Here's my take. Digital currencies are here to stay. The real question is, what kind of digital currencies will we have? Who will control them? Will they empower everyday people or big governments? Will they make our financial system more stable or create new ways for it to crash? The answers aren't set in stone. They're being decided right now by developers, regulators, and by you. Where you put your money, how you vote, and what you demand from financial companies, it all makes a difference. So I want to ask you, are you an optimist or a pessimist when it comes to digital currencies? Do you think they'll ultimately improve things or make them worse? And are you using any of them right now? Let me know what you think in the comments. I'm really curious to see where everyone stands. If you found this breakdown valuable, please hit that subscribe button. We're going to keep diving deep into the tech, the economic shifts, and the big changes that are reshaping our world, one video at a time. The future of money is being written as we speak. Understanding it isn't just a good idea anymore. It's essential. Thanks for watching, and I'll see you in the next one.